years, but I want to help you understand that let's start changing the initial narrative about money. See, money is not the root of all evil. And I know that we hear that a lot. It is scarcity is put on us, and pressure. Not only that, pressure is put on us because this myth pushes people away from talking about money, managing money, building money, right? Most of us just go to work, pay bills, and then, maybe put up for a rainy day. And it seems like lately it's been raining every day, right? So learning about money, plan for all possibilities. Money is nothing more than a tool. So we understand that it's something that is to be circulated. It's not for you to hold tight onto, but it is good to, when you start learning about money, you have the potential to use this tool for good. And its perspective, actions, and individuals can turn the money into a positive and not an evil perspective. Because we do know, you may say something like, hey, this person has a gun. Yeah, the gun could be used either to protect the person, or it can be used in ill will to harm a person. It's all based on the decision of that individual. So people, it's the saying, money comes to me easily, money comes to me frequently, it's the saying, and you want to think positive about money and not saying that it is the root, because guess what? Money keeps the world going around. Money circulates, keep us with our roof over our heads, clothes on our back, food in our mouth, right? So money is a necessity if we know how to plan, we know how to leverage, and also making it, right? So I want to talk about the basics, like something that maybe we're all familiar with, and being familiar with money can change some things in how we grow with it. So money can alleviate financial stress, but it can also cause financial trauma as well, because most don't have money management skills. That is the number one root of, or should I say, the core of failure by us not being able to pass down the wealth to the next generation, because we're not managing it right. We're not planning it right. We're not prepared because, again, we're trying to hold on to something instead of just using it as a tool and leveraging things. So if we have someone on here that's real familiarized with credit, if you, and I know this part is a little darker, but I could not change the color on that screen, but you can always zoom in on your side, you guys. So the management skills are what we're lacking. But utilize money as a tool to pursue experiences and legacy. Now, what you're looking at is a credit score factor. The reason why I wanted to start with credit, because this is one of the second fastest. I wouldn't say this is the fastest. I would say the second, because first I would believe to say personal opinion, life insurance, but it's all depending on how we use it. But credit will be the access, the easier access, right? Because we don't have to actually put money up to build it first starting off. You can get approved based on your activity. So looking here, I'm gonna use my mouse. Looking here at the percentage, meaning highest meaning most important, and lowest it means it's not that much important, but all collectively it means it's important. So 35% is on-time payments. So if you know that you're not on time and you know that you don't have the discipline, even with credit, cash, or insurance, or anything that you do work, if you're not an on-time person, that's one of the things that will, I wouldn't want to say failure, right? Because sometimes we do experience go through failure stages, but it's not the end of the world. But to stump the growth of someone succeeding in how we utilize money as a tool, if you don't know how to pay things on time. Hey, we getting creative. We may put Google alerts on our phone. We may put appointments in our calendar. Alarm clocks may go off. Reminders are set. So get in a position where what is important is on time. Pay it early. Hey, I like to stick by that motto. If we know the bills or mortgage is paid by the 1st, if you have it, then just pay it on the 30th, pay it on the 28th, right? So then utilization, or what's owed, because this is something where that's 30%. And we like to say, don't go over 30% utilization. That will show even a greater sense of your ability to get access. So we're going to keep talking about this getting access and utilizing. Your history. Your history is how long you've been engaging with the on time and the utilization. See, all those three come and play a factor together. Now, when they look at the 10% of like new lines of credit, or we like to say mixed credit, how many different types of credit? You may have installments. You may have installments, mixed, meaning could be car note payments or mortgage payments. Couldn't think of the word right now, but you have installments, and then you have I can't think right now. Now, and also inquiries. Inquiries based on how you continue to, request for more or in search of new lines of credit. Okay, revolving, excuse me, y'all, for revolving, it came to me. Okay, now this whole capacity of the length of history and the past credit applications and things like that, if you understand this quadrant or this pie or what they're looking for, you can master how to utilize what you can get access to. So based on these skills, now let's focus on the two. Let's focus on the two higher, right? Higher percentage, meaning as long as you pay your bills on time and you're also staying in that cushion of where they want you to be, is if you spend it, you pay it back, and you pay it back on time. This is good when it comes to business or even on the personal side. Long as when you spend it, you pay it back, or you pay it early, or you stay within the utilization, or whatever you owe, you want to make sure within that 30% you pay it back. Or even if you go all the way past 30%, you're paying it way less than they can report it, because these score factors is based on at the time that they're reported and showing. So again, if you know how to maneuver or master this pie, this example, then you can get more and more access to the tools that you need. So credit is used as a tool. Now, as sometimes I do have a catch-22 with it, right? Because how do we use this tool, and why do we use the tool, and for what reason? Now, I wouldn't say utilizing credit or getting your score to over 700, getting your score to over 700 is just to brag about, I got a 700. I'm in the 700 club. I'm in the 700 club, and you just sit there and don't use it. I get people that do that. Or they may get approved and they scared to spend the money on a card. So the point of even getting the pursuit of experiences is, if you get approved for this, I'm going to use 100,000. You get approved for $100,000 line of credit, and then you purchase something that is a hard asset. Okay. Now, a hard asset can be in a form of, can buy real estate. You can get some land. You can get property, real estate, vehicles. Vehicles are not a liability if you can purchase it right out and also use these things as the tool to bring more money. Right? Now, because these are the highest percent, and what if we don't have the history? So what do? Right? We don't want to just stop there and have our hands tied behind our back, because they give you opportunity to manipulate the score. You can actually borrow someone's credit. You can actually be a shadow, or what we call piggyback, right? Or be a authorized user. Hey, can I be authorized just to, be on the face of this car for the next 3 to 6 months? But understand that your reflection of what they do will be a reflection of your score. So if your score is less than the person's score that you're actually borrowing the history until you actually build your own, because all these things is through a temporary phase. Temporary phase is just saying, I know what I need to do. I have a goal set in front of me. Maybe I need to get a goal taken care of within the next 6 months. What is your mindset in the next 6 months that you can master this tool? In that 6 months, you're saying, I want to get approved for this house. I want to turn it into a cash cow where other clients are paying. Now you're paying off the debt. But one thing that people are missing when it comes to utilizing the tool, you use the tool, and then you also need to hold the asset. Now, some don't understand that, okay, if I have a house and I have a mortgage, I can't do anything with the house because I still have a mortgage. But that's not what it's saying. The mortgage is already given to you. The mortgage is already your obligation. Now the house is yours, right? That's what the mortgage was used for the home. Now, I seen someone that had said family business matters. This person may get a house for their family, but guess what? The person that took out the mortgage, it's only one person's obligation. I think it was a family of 5. I wasn't sure, but it may be a family of 4 or 5. Her purpose is to get the hard asset by using the credit as the tool. Once that asset is obtained, immediately move it to protecting it. And this is the concept, and I'm going to get deeply into it. I know I spent a little bit on this, but I'm going to show you how, just like growing a seed, planting a seed, we water the seed, we watch it sprout, we continue to water, we go through the seasons, but the ultimate goal is to grow. And if we know we harvest whatever, tomatoes, cucumbers, whatever we're seeing the fruits of our labor, that is the ultimate goal. So now that I'm using the same sentence of planting the seed, is that you have to know what you want. You have to have a time frame of when you're going to execute this process. And you have to have a goal in mind. So if I get this car, if I get this house, if I get whatever asset that I use this credit tool, because right now this is a credit tool. This is not a long-term thing. So now I have to make sure that I create something that I can make sure that my family will receive the hard asset. Okay. Now, the fact that we use I got to move something out the way. The fact that we use credit as a tool first, right? We still need money, meaning we still need to water. We still need to, have that sun and rain, all these things, these stages of growth. Borrowing power, or is it a curse? Because we still have to pay those monthly payments on time, because that's that highest percent on time, and we have to pay that within that 30%, right? So borrowing can be a one bad day from a financial ruin if we don't have the managing skills or the discipline. So that means, can you afford $100,000 credit tool? Maybe you should go smaller until that is paid off. I apologize, y'all. I need some water so bad. Hold on. So maybe you should not overextend yourself, because you have to understand, even from personal or business, assets that are not owned or controlled can carry the burden of a monthly debt payment. Right? So even though the word is saying credit, right? It is something extended to you. We're going to still stick with the $100,000. The $100,000 is extended to you, but you should have in the back of your mind the reflection that I have $100,000 to pay it back. Now, this is where the hustle and the grind comes in. And this is where a financial plan comes in. Because if you on a monthly debt payment cycle, and we don't know what happens from us from day to day, because borrowing can put you in a one bad day away from a financial ruin. Because again, you'll have your history messed up, your utilization will be messed up, because they're reporting monthly and you're paying monthly. But don't fall into the trap of comparing yourself to others based on material possessions, because again, sometimes we want to keep up with the Joneses. We want to see other people doing what's this person doing it, so I got to do it. Is this something that you can maintain? Is this something that you can handle? And because we connected from the social world, or just the pressure of inflation, that we have to be a certain way, live a certain way, walk a certain way. Society say, oh, don't be like this. And then society say, oh, you're doing too much. So we're controlled by so many different things, but that's only if you don't have a vision. That's only if you don't have a plan. And the reason why monthly assessments is good, because things change monthly. You may call out of work. That means it's going to take some days off on your payroll. You may not have a book client. You may not sell a product that day. That changes the numbers. So what I like to do is focus on building my own financial stability. and building my own financial stability that has been leveraged up maybe consumer goods, rental homes, vehicles, that you're bringing in revenue. So don't just stick to one thing. You know, when they say things like, you have to have 7 strings of income. Well, that's if you can maintain those things, but living outside your means will always force you into this financial struggle or stress that you just continuously just running. I like to call it like you're a hamster on a wheel, cheese wheel. Because I was in collections for so long, it's like I understand this game that they're playing, this money game, right? Because if we don't understand that the tool is already given to us, if we know how to, one, understand what they need. They told you 35%, 35%, 30%, 15%, 10%, 10%. You know what you need. So now you need to master what they're looking for, be what they call it is bankable, or be in a position that if you are going to borrow, you need to already be working on 5 or 6 different strategies to bring in overflow. This is when you start thinking that I'm not average, right? I want to think in overflow. So if you say 30%, I want to be at the 1 or 2%. If you say, oh, the history has to be a certain amount, or I want more. I want to make sure that I can be able to not only be stuck in one category, but in the meantime, obtain hard assets. And the number one thing is move hard assets. I can't stress this enough because I'll give you an example. A Rolex watch is something that it's good looking, right? It's appealing. It brings in, it could bring in money just by looking at someone and say, hey, I respect this person. This person must, do some quality work, whatever. They might look at your wrist and say, you do some quality work, right? Bring in some revenue. It also appreciates, but it also can be an asset that is being held as debt. Write that down. Sometimes we have assets that are being held, waiting to be collateral to a debt. So that's what I mean by move the asset. Even if something is like moving a Rolex watch, you have a title, and it don't necessarily have to be Rolex, y'all. It could be a diamond ring, engagement ring. It could be, anything that is of value. But I'm giving you an example, a scenario. And I'm explaining to you how this can possibly happen. American Express can extend $100,000. You guys broke this $100,000 up. You put deposit on your house. You went purchased a Rolex watch. You swiped it because they're giving you points in exchange, right? So you're using this one card, and now it just gave you 3 different ways to leverage. But if you never move these hard assets, it can now be taken back away from you because we don't understand digital asset protection. Everything is traceable. So if American Express says, well, wait a minute there, remember I talked about borrowing can be one bad day away from a financial ruin. So you go purchase the house, you go put that on the card, or you do a balance transfer. So they see in these electronic transactions. You go into the Rolex store, you swipe the American Express card. No, don't get me wrong, you're paying the monthly payments back, so it's not nothing that you're doing wrong. It's your mindset that happens behind these actions. Where is the benefit with using these tools, okay? So now I'll give you the scenario how the Rolex can be repoed, or how can I say used as debt. Something happens like a natural disaster, you're not able to make your monthly payments. They want the asset in return to pay off the debt that is owed. They see the transaction because it's digital, that they extended the $100,000. Now let's say the Rolex was $20,000. Now the $20,000 Rolex has to be turned in because it has a title, it has registration, you guys. It has to be turned in, or now court can demand this particular asset because everything is traceable and everything is tracked by the transactions. There was no goal to separate it. So what could we do in those sense? If you ever was to turn your credit into cash, you're still going to use the points because you're making mobility in actions, right? You use the transaction off the digital platform, off the card that's traceable. Get the Rolex and transfer it out of your name. It could be in an LLC name because companies, hey, you want to attract clients? This can be used as marketing. It could be in the business name. It could be in the trust name. These are different things where you're using the tool credit to now, as a tool, to keep a hard asset. That's what I mean by moving. And that was just something on a base of like something that was tangible. Okay, that was just an example. But understand that all debt carries risk no matter what, and you know, based on your signature. So I said borrowing power can be leveraged if we understand the temporarily tool. Cursing yourself because we have to sign, we have to agree, we're obligated, you know, we're you know, continuously paying back a debt. Yes, it was a credit, but as soon as you get approved, it is now debt. No matter how we look at it, some people say it's good debt, it's still debt. And when you have debt, it can now be looked at as a curse, meaning that how can you get out of debt? Our whole goal is in freedom, living free, is to live debt free and have multiple assets. Okay. But so money is not worth losing your mind. Okay. Nor is it worth jeopardizing your financial stability. So, you know, you get people that's like, you know, I need money now. I need money. I'm not talking about go robbing a bank or anything like that, but you don't have to, you know, do it in a way where you're like getting false identity, you're making false reports, you're making, you know, those type of things because of the pressure of saying money, 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 I need it. You want to see it, you want to feel it, you want to touch it, you want to buy things. But is that what we use it for? Do we have to actually see it to actually maneuver through society? No. Some of you guys get direct deposit. You guys don't actually see the money. It never touches your hand. And because we're in a cashless society, we don't want to focus on money, money, money. So now your whole life, you're wasting time because the only thing you want to do is chase money, chase money, chase money. So don't lose time chasing money. You know how I got started? And I told my story before. I'll even tell you how I actually got in partnership, or it's called grandfathered into the company. I was an employee just like anybody else. I was hungry. I wanted to be successful. I just didn't know how. Until my mind flipped. My mindset hit a switch. I really was tired of being in this cycle. It was like I made money or I get a good job. I was making, it was a salary base. I was making $25 an hour. And I also got bonus on top of that. No one could tell me nothing until adversity hit. It's like, whoa, can't even pay. I can't get this car. This car getting repoed. The sheriff gonna come lock the doors. I couldn't understand money can come and come and come and come, but how can it continue to have things trapped and taken away from me? So I was like, you know what? I need to be a business owner. I thought employee was just the wrong thing, and I wanted to be an owner. I said, but if I was an owner, I could just employ the whole world and I will always be rich. Well, that was not the case, y'all, right? But it was my mindset, right? And I wanted it so bad that if I can work, some of us perform at jobs and we work 110%, but then when it's come to starting a business, we get, you know, so fearful that we just put these things that we don't even have the skills that when we wake up 9 o'clock, the clock in, we back to, you know, with 110% momentum. We back at 110%, but we're still clocked at whatever 8 to 10. Sometimes people do 16 hours. Some people get 2 jobs, because they're just chasing that they want to see, they want to feel. And people call it job security. And I understand this mindset, right? But don't forget your actions. Don't forget that you have a routine, you have a regimen. You get up in the morning, you get out the door on time, you clock in on time, you clock out a break, you get back from break, you take a lunch, you see them saying you have that much discipline. But you have to understand that you can cultivate a strong work ethic for yourself to help others, because that was my whole mindset. I knew my passion. I knew my gift. My gift was I always wanted to help people. Even when I worked the job, I'll help people on calls. I help people. But I had to start seeking the opportunities to help people. The only difference is, as you see me starting now, the only thing I say, if I start slow, or it starts low, the good thing is that I just started. long as you start and you continue to feed your mind and understand that money is a tool. So when you have a tool, just like if you were building a house, if you were putting together some type of furniture from my IKEA, because they come with a lot of pieces, you need a manual. So some of y'all need to write that at the top of your goal chart. If you guys stay into this Inner Seed program, we are focusing on our board, our vision board, and it need to be a money manual. Because yes, we could put the boat, we could put the fancy trip, we could put the diamond ring, we could put we want to be a millionaire, our family be millionaires, but what is the money manual? So what I did was I started understanding that if I love money, how can I understand how to use it? Not just make it. Because then when we want money so much, what do we actually do with it? Do you know some people get approved for, let's say $250,000 SBA loan? You have a business, you get approved and you don't know how to spend it because you've never had that kind of money to even understand to maintain it. So if you chase money and you lose sight on why, let's go back to, and again, our foundation, we're at the soil. So the seed is, we do need money. We want money. Money is attractive. We love money, right? Money do make me happy, right? But what is your why once you get it? What is your reason? Because if you don't have no way of impact, right, to help make lucrative income where you don't burn out. You ever go to a job and you're like, I hate this job. Every day you go to a job, you hate the job, you hate this job. There's no impact there. You don't want to be there. So what happens? You quit, you try to find other jobs, and now you're how can I say, indecisive. You're not rooted, right? You're not staying focused on one thing so you can make sure you master that thing. And I'm not saying staying in place, but master that thing so it can now come to you. Do you know money comes to you? Client comes to you. Product will be sold off the shelf. You're going to meet people that you never know because you're focused on the impact. You understand the money is going to come, and every time that money comes, it's going to be put right back out the door because you know it's a tool. But if we only focus on earning income, it's going to become the biggest distraction why you don't have none. Or you always finding yourself with money, without money, with money, where does money go? You ever hear somebody say, what, I blew this money? Or when you get your paycheck, because I used to get paid, I used to go from paycheck to looking for my next paycheck. I wasn't even living from paycheck to paycheck, right? And then what I did was, let me just tell you again how I started to even go into opening a call center. I used my last income tax check. My last income tax check, I took that money. I think it was about like $8,000, y'all. I was getting a steal because he Shark Tanked me. He took 60% and I had a 60-40 split, right? It was an opportunity for my family. It was an opportunity for my family to make more money just being an employee. If your mindset is not to exchange time for money, then you're going to win because you're already looking at the fact that I want time freedom. So I want my money to work for you want the money to work for itself. There's no confusion about money. It shouldn't be a confusion about money. Once it comes, what do I need to do with it? That should be your focus. Am I putting money in the right place? Some of you guys say this is an investment. Being here, watching this video, or being here is the investment that I need to go to the next level. Because some of us are not even thinking this way. All we see is at the top of that stairs is if I just make a step, I want money. Well, keep going, money. Keep going, money. And the whole time you're missing sight on the money manual that you need to create. I can't go to everyone and tell you exactly how to make money. Sometimes people create mentorships and coachings, and they're joining just because I want what they have. Show me how to get that money. Maybe everyone's situation is not the same. Maybe the way the plan is in your life and what you can maintain, because everyone's mindset is on different levels. If you graduate from college, if you have a degree, everyone's learning abilities and perspectives are on different levels, even if they all graduates. Some people may have degrees, and guess what? You may study in an area which may be upside down, where you have a degree and then you can't even get a job to pay back the debt that you even took to get the degree. Some of them end up upside down. Some of us get money and we get assets, and then we don't get assets that appreciate and then the depreciate, and we upside down. And then we want to blame the world. Right? So now that we're focused on the money manual, we should never be afraid of money. We should never get stressed about money. We should never try to take somebody's life for money. All you got to do is go back to the foundation and your why. So when I opened the call center, I knew what I could do. The only problem that I did, and I'll tell you my problem. My problem was I just wanted more money, right? And guess what? I still had an employee mindset. And some people are not going to understand this part, but write it down anyway. Some people are broke on different levels. That's what I kept running into. I had an office. I was considered an owner, a boss, but I was broke on a different level. Because I was only focusing on earning. And that was my biggest distraction. I didn't know how to allocate tasks. I was hiring people, and they knew, and they seen that I was stressed. I was, operating in anxiety because I wanted money fast and I wanted it so bad. And then guess what? As an owner, guess what I realized? You don't even get paid first. You be like, hey, wait a minute. Do I really want to be an owner? Do I really want to cut checks and pay overhead? Because you didn't plan. The manual didn't show you that, oh, when you get to this level, it's different. So you had to change your mindset when you get to this level. So each level of growth requires a different mindset. Oh, I hope you're picking up what I'm driving. So the plan, and everybody may be in different, you may have a daycare, you may have an ice cream parlor. Maybe you want to, open up a home health aid, trucking. But the foundation should always be the same. The solitude of your mindset is saying, what can I do to change how society is ran, become a problem solver, to help people create opportunities? These are ways and genres, or should we say in lanes, where you should focus on what is your passion too. Because if you don't have passion, you will fizzle out. If you want to write this down in your notes, if it starts with money, it will fizzle out. You're going to burn out. You're going to run out of gas because money was your only motivation. There was no purpose behind it. There was no focus behind it. It was money was coming. Then you get excited. Then when money comes, you start spending things to start looking like it. Oh, here this part comes. We want to look like the success. I'm not talking to y'all. I'm talking to the old me. We want to wear it now. And all these mistakes that I watched other people, when I got grandfathered in, I didn't understand. He kept getting hit with lawsuit after lawsuit. He kept getting with attorney general complaints. I'm like, ooh, I don't want them. So I learned really quickly, really fast to come out of that employee mindset. And I was making money fast. If you ever understand call centers, calls come in rapidly fast, and you're really just running through the nose. So some of us, we quit in business because somebody said no, a client didn't buy. No, in collections, no. We got to get you. We got to get through y'all because we don't waste time on the nose. That built posture. Hopefully that helps you in that area. Hurry up and get through the nose. If you shuffle a deck of cards, we only want to look for 4 aces. Don't let a no, or don't let you didn't get a client book. You didn't sell a product and this don't work for you. You have to create the opportunity so it can work for you, so we can understand this thing called money and how we can keep it circulating, or we keep the money working for itself. That is the goal. We want to put the money to work. And if you want a whole bunch of people to help you, then that's another concept. Okay. I know I was on this slide long, but the slides only keep me on time. I could just talk without slides, but it keeps me in my time frame. Okay. Inflation is hurting us all. Where we are in society, I was saying it, I kept mentioning it. I was like, listen, y'all, listen, this is a setup, right? I was like, this is a setup. And some didn't understand, why was all this money given to us? It was just freely, right? I even got caught up in it, meaning like, customers were coming. It was people coming from all over the world. I'm like, I don't even know these people, right? They know me, social media going, and everything was going so fast. And every time I would stop and do my I would listen, y'all, write this down. Self-assessments is necessary to be successful. Because think about it. You ever been on a merry-go-round? And if you keep spinning and spinning and spinning, at one moment, you're going to get dizzy and you're going to not have balance. Some of us may buckle to our knees. Some of us may completely fall off the surface. But you have to have balance. Continue to make sure that you are on solid foundation. Okay? This season, you must reduce spending on unnecessary spending or your day-to-day activities or your day-to-day expenses. Start watching, cut back, because it's going to get more and more and more crucial. Okay. Live off your minimum as much as you can, or as much as you can afford. So I know I keep reverting back to employment, but because if you are an entrepreneur, if you are the person that, go out and make money for yourself, that's like, we got a hunt to eat, right? We either sharpen knives or we gearing up to go out to eat. We eat to kill or kill to eat, whatever the case, how you base that scenario. But we don't have a security, or we know that when we get up and go, unless how hard you work or how you master the plan. See, if you got a money menu, you just know what to do. You just got to keep implementing and change not only the plan, but keep the focus, keep the vision, keep the goal, but rewrite the plan. See, there's no option for me to give up. The only option is I need to create multiple smaller tasks to still get through the next level. Okay. So social studies shows that even 1/3, y'all, of all Americans is making over $100,000 per year are living paycheck to paycheck. So, this whole, I'm gonna show you how to make 100 grand. I'm gonna show you how to make 100 grand, 100 grand. Don't fall for the enticement of what, and I always say this, like, your eyes get so big for the opportunity that your heads get small, that $100,000, because inflation is so high, $100,000 is nothing now. It's now a paycheck to paycheck living society. And society is running now off of workers, taxpayers. That what society was doing. It forced everyone. They say, you know what? We want them to borrow. And then we're going to raise prices so high that they're not going to be able to pay these things back. Something's going to happen. Maybe a job is going to cut back. Maybe they're going to lose their job. Maybe they're going to, so many different things. Or even if you have an asset, maybe someone's paying rent. Your tenants stop paying rent. Maybe you have a vehicle and someone was renting cars. Maybe they don't have the money to rent. The whole cycle was coming to put a halt. But the winners are the lenders. And if you were left only as a borrower and you ain't got no assets set aside and tuck, say, hey, for a rainy day, right? Because money is no longer the savings. It's the asset. It's the investment. So if you invest in something, maybe you put some money here, maybe you got some gold and you like, I don't want to crack this gold. I don't want to turn it in, but you set it aside to discipline yourself. See, these are the plans that you should have wrote down, or you still can write these plans down to say, if you're a person to say, I can't even look at my bank account. Listen, I was the type of person, y'all, that if I was getting my paycheck and I needed to save money, I'm like, please, can you take 30% out and just immediately separate it, right? I'm like, immediately separate. I don't even want to see it in my balance, right? Or I used to, at 1201, when I would get my direct deposit, y'all, I used to, don't look at it. I wouldn't look at it and I would pay the most important bill, because that was how much I was not understanding money in the tools, right? Now, how I think is, what can I do with this money that's going to allow this money to work for itself? This money got to bring back money. Rather if it's invested into your mindset, invested into a position to say, I need to think different. I need to be around different people. I need to rewrite the plan, but I need to stay focused on my dream because I don't know what's in y'all heads. I don't know what's in your mind. God gave you a vision. There may be a vision, a plan that is completely ordained for your life. But you can get coaching and help. Ask him a reminder, because people know their habits. People know they lack discipline. People know that they are distracted, but it comes out of repetitive behavior. It comes out of, how can I say, like a regimen, like a routine. That's what I was trying to say, a routine. So building wealth requires that discipline. That's where I'm at, y'all. Building wealth requires discipline, financial management, savings, and investment. Okay. Now, a dangerous misconception is relying on credit cards. This is how we keep going back to the circle. It's like, oh man, I maxed the credit card out. Like, oh man, oh my God, how am I pay these credit cards down, right? As long as I just don't miss a payment, I'm gonna max it out, come bring it back down. And then you start realizing, oh my goodness, I'm bringing in $100,000, right? I'm bringing in $100,000 a year, but I realized I borrowed that $100,000 from American Express. So I'm never leveraging. I'm just barely maxing or meeting ends. Even as a millionaire, if we were to say we're making this, $100,000, right? Let's even just say we're six-figure, seven-figure. You could be a six-figure, seven-figure, but broke on a different level. So expenses outside, I didn't mean to do that, y'all. Expenses outside your means, right? Some of us want these lavish things. Again, we want to wear the success. We want to look apart instead of being apart. I say these things, my sayings that I say, and some people can remember these things vividly, is like, doing the work is the shortcut. You know why I say that so much? It's at the top of my board. It's at the top of my money manual. I can never lose focus and sight. I don't care what the world looks like. I'm gonna be one of the ones say, I'm in a what they call it, a safe house. What do they call those things? Like, I'm in one of those is it safe house? I want to call it something else, a bunker or something like that, right? I don't know. I'm stocking up. We got waters, rice. Y'all go ahead. Y'all want to buy the Cuban links, and now I do keep my maintenance and my appearance up, right? But that's a part of my means to bring in more money. See, I have an intention to bring in more money. Oh, is this gonna make me look? Is this? Oh, how do I have to look on the next consultation or the next to bring me more money? You know what I'm saying? But it was just me being jokingly, but saying, but that's how you got to think, y'all, down to the dollar, to the core, to say what is benefiting me and what is also hurting me or costing me. Okay. If you don't articulate your goals, the bank will turn into your money manager. Who wants that? You ever feel like you deposit money into the bank and then they start looking at you like, what you want the money for? You get ready to take a deposit out, make an appointment to take the deposit out. You start thinking like, well, wait a minute. Did I not just get this money to you? So you need to articulate your goals. If you're sitting at a table and you're asking for funding for loan, personal loan, or startup money, grants, and I don't care what it is. If it's from a financial institution, if it's from somebody else, because sometimes you may talk to your rich, I'm about to say boyfriend, you might talk to somebody that can invest into you, that believe in you, and they say, I'll give you the $20,000, I'll give you the $50,000 to get a head start. But you got to articulate, and I'm not saying by mouth, you got to have a money manual. So if that's your operating agreement, if that's your business plan, if that's your proposal, everything has to look according to how you're going to go. This season will change your life. And this is just the beginning, because I'm only giving y'all the foundations. I'm giving you just right now the think different process. And then, of course, if you guys can write your notes and you start looking at, okay, I'm already halfway there, or I'm already I'm on level 5. I just start losing sight. I start getting out of control because things were going so fast. Sometimes you need to go back dot your I's and cross your T's. Sometimes money will just come so fast. Then you know how you got a big old mess. Like me, when I clean up, I be looking around because I rearrange when I clean up. So I be looking around, I'm making a mess. Or if I'm packing, I be like, why does this house look a mess before I pack? Right? So you want to go back, dot your I's and cross your T's. And I'm telling you, each month you be like, I knocked all my tasks out because I created 5 small tasks that's going to accomplish to give me that next number I need. See, if you guys look at numbers, time, tasks, and if you want to write that down, numbers, time, and tasks will get you through every season. Because now now that you look there, okay, I started this business 6 months ago, or I started this business a week ago. I start now seeing the routine. You know what I also use, you guys? My social media is my journal, right? So if I post a certain post and becomes more engagement, right? It may bring the most engagement, maybe the most controversy, maybe the most talked about, maybe the most confusion. I'm going to take that, either turn it into a class, or I may take that and turn it into some more content to draw in more. See, everything I do is intentional, because now that we get a chance to reach out to the masses, now that I understand the masses is not going to be long-term in regards to the social world, guess what's happening? We need to go back to reality. We need to start seeing that, wait a minute, all this that was happening so fast, we couldn't really see what was going on because we was controlled by whatever the media put out to control our minds, to create scarcity, to create impulse, to create, and we're not even thinking. You're like, wait a minute, I'm just going by with the flow because they going, wait a minute, they actually going too fast for me. You start realizing why you so out of breath with your own personal goals in your life, or you trying to figure out why you always feel defeated, like you feel like you're not doing enough because you're trying to keep up with society that is moving so fast when they were already planning for this stage 10 years ago or 5 years ago. So your goal in this concept is to make sure you create a plan, take the opportunity to create a money mission. Meaning, money is temporarily. Hold on, let me see how I can share my screen. Is my screen sharing? Hold on. Let me see this. Please type in the chat if you can see this. See this really quickly. Hold on. Hold on. Let me try it again. And we get ready to wrap it up with this. So I'm going to play this clip, and actually I'm going to, with this recording, you guys are going to get the full link, or you could type it in your notes as well, because I left the title on here. I watched this. This is only almost 2 minutes, you guys. So I'm not going to hold you long, but this is about maybe almost an hour or two, almost 2 hours, maybe an hour 40 minutes, hour 50-minute documentary. And, you know, we can talk about Fed now. That's actually going to be on the next one-on-one. See, this title of this teaching was S.C.A.M, Still Confused About Money. And what society has done is create chaos, create scarcity, create confusion, and us not understanding what are we doing with this money, or how are we going to make more money? We got all this money, we don't know what to do with it because we done borrow, and now, you know, so now that what you have to do is regroup, figure out a plan, what's best for you and your house, your business model, to continue to grow, to continue to expand, right? Or if you're, you know, declining, is how to stay afloat, okay? But this particular clip is very important, so I'm just going to get out the way and let y'all hear this clip.
Of last year was a full-blown panic in the shadow banking system. It wasn't something that you have when you have a pandemic, you have a bank panic. It was, you have a bank panic because you had some exogenous shock in the economy and you have these underlying vulnerabilities in your monetary system that you haven't resolved.
The Fed sprang into action. They turned back to quantitative easing, buying hundreds of billions in debt from financial institutions. By mid-March, they made more than $1 trillion available to the shadow banks, and they cut interest rates back down to near zero.
Federal Reserve cut interest rates to near zero. What that tells all of us is that the economic impact of the coronavirus is going to be crippling.
The Federal Reserve lent $500 billion to securities dealers, $500 billion to foreign central banks, bought $2 trillion of treasury securities, another $1 trillion of mortgage-backed securities. It flooded the zone with new government cash to stabilize this system.
But it wasn't enough to stop the panic.
The emergency rate cut failed to calm investors. In fact, it did the opposite.
The corporate debt market had frozen up, and companies were unable to finance themselves, putting the wider financial system at risk.
There's just this corporate debt picture out there, and we're just beginning to see how those dominoes are going to fall.
So on March 23rd, the Fed took its economic experimentation to a whole new level. With Congress's backing, Fed Chair Powell announced a range of new loan programs. He said the Fed, for the first time, would be willing to buy up corporate debt.
We often talk about the Federal Reserve using a bazooka to tackle markets and the economy. This is bazooka, cannons and tanks all at once.
So to wrap this all up, you guys, what is happening now is that it's called quantitative easing. What they have done is, let me see, what they have done was force loans, debt, out to consumers, because they know consumers, people buy. That is the business. You know, if you ever heard me say people are business, that is business. People are corporations. People don't understand that term, but people are corporations, because if banks and lenders meaning because it could be hedge funds and all that. So that's why I always say banks and lenders, financial institutions, hedge funds, private equity firms, all these different companies, stock exchange, all these different financial businesses, long as they get people to borrow with the interest, increasing the value for them to have more money. Because now, if they say the United States is $1 trillion in debt, in order to pay the debt, is the interest is what they're using to pay off the debt. Okay. So what I want people to understand is that if you are a borrower, how are you borrowing and why are you borrowing? Are you borrowing to make sure that your family will have an asset to keep, to protect, to leverage, to continue? Is this asset making you more money? Right? So we want to start thinking, change our mindset when it comes to money, not just to have money in our pocket, because what they have done is now, once to become a cashless society, a lot of us has to think transactions that we're doing is digital. We don't have no digital protection. And you know, this is not the trust program, but you know, I'm very, you know, headstrong when it comes to just talking about protecting your assets, and you want to protect your money too, right? And that's why our focus is like, okay, where you are, I'm meeting you all where you are. And if you can get to a better understanding is that I need to regroup and process really how I look at money. Even if it's credit, it's still money, but it's not in a tangible sense. It still will allow you to use the credit tool to obtain an asset or a money tool to obtain an asset. So thank you for watching. And thank you. And send us for feedback. I don't never ask for feedback, but I always think that, is it helping you? How is it changing your life? How are you utilizing these tools that we're providing for you to increase you and help you grow? So thank you for watching.